Very good evening, friends. Welcome back to my channel, Smart Index Edge. I'm Nalnakshi Swami, analyzing Nifty for tomorrow's trade. Before analyzing the Nifties for tomorrow trade, it is very necessary to see what has happened on the daily chart. What is the structure on the daily chart? So if you see this, the price has not gone anywhere since 12th May 2025. May, June, July, August now. So market has not done anything except it reached 25,537 in the month of June. It made a peak and it has come back to the pavilion. That means it is trading in a very broad range. Broad range, if I take the tool, this is the range of 1180 points. 1180 points range, market is rotating, not able to move past. And if we see this trend is, if I see this trend, it had come down in the month of April 2025. It made the low of 21,735. From there, it made a double top and then it has gone down. Now, again, the rotation to the downside has started in the market. It is a rotation within this range. If I take the circle or something, this is the range. Sorry. Let me take another tool. This is the market is within this range. Here. It is a just portion of this. The time has been spent from 6th May to present day. So market is in a range in complete this year, starting from May and June. You can see that market has not gone anywhere and it had made a peak last year, 24th, October 24th, 1 year down. From October 24th to March 25th, the market has come down and market has gone up from 3rd June to October 24th. So market is within this broad range. This is June, election year, election day candle. From there, it was a very swift move, and this swift move was corrected in a slow and steady fashion. It took how many, if I take this, we will get the days, how many days it has taken to come to this level. 214 bars and 315 days, almost an year. The market has come. Now, it is from this level, it is halfway through. The 314 days comes to 26th, February 26th, Friday. February. So here the market has completed only 160 days. That is only half of that means almost 6 months it has taken from April to September. We are in the month of September. Month has started and we can say this is a consolidation. Either it is a consolidation before the breakout. It is a painful thing. When the market goes sideways, so many things will come into our mind, whether it will fall or not, whether we have to invest or not. So if I take the weighted volume average, anchored weighted volume average, it is running and price is above the weighted average. That is, weighted average is saying 23,458. The market has come down and it has undergone through sideways movement below the weighted average price and then moved higher, and it is consolidating, going sideways. This is the broader picture what is happening in the market. Coming to the, if I zoom in, what has happened at present. See, this is the entire thing is, let me take out this, entire month from the low of 7th August to this is 21st August, the market has gone up, crossing the July month high. But it could not sustain, it could not go past July's month's high. So it is, the price action has been contained within the July month's, this one level, and it is back to the pavilion from where it has started. On 8th August, market had made a low of 24,337, whereas now almost we are near to that. Tomorrow will be 1st September, the beginning of the fresh month. The closing of the month is bearish, August month is bearish, though it has moved higher like this, and it is just like nothing has happened. Just time has elapsed, price has moved, but price has not sustained, and it has just, you can say virtual peak has made, nothing has happened. Market is there where it was. That means price has come back to this level, and this is the closing opening level of the, on 7th August, opening level is 24,464. Now market has been trading below the 24,426. And the opening on the 11th August, the opening price was 24,371 and the low is 24,347. We are almost near this. Same thing. Here in this area, market consolidated, came down to this level twice. Same thing. You can see over here, 21st May, and again on the 12th June, the market has come down. May and June. Here, August, in the same month, market has come back to the same level, 24,347. What we need to see is whether this price action, since it had grabbed the liquidity and had moved higher, and whether it is retesting of this level or whether the down move will continue, only the price action time will tell. But on Monday, what we need to see, if it doesn't stop, if it doesn't break this level, 24,347 to 371, market may show some sort of reversal price action in the market. So if I change the time frame to the daily candle is very huge, ranging from 25,013 to 24,404. So this was the range, weekly range. It's a very huge range engulfing all the 3 weeks of price action. These 2-3 weeks of price action, in a single week, the market has plummeted down and it has come down because of the Trump tariff notice. Tariff, this one effect. Or it is the normal price action. If you see here, you can see the market has come down 1, 2, 3, 4, 5, 6 weeks of downfall and 2 weeks of pullback, and it is showing the continuation of the down move. So what can happen in the market is, suppose this is the 50 percentage. If I take the 50 percentage of the weekly range comes to 24,770. Market may try to spend time. It may show some pullback in this week, Monday and Tuesday. Again, it may resume its down move because it is a down move. And if I measure it has already broken this leg. Since it has broken this structure, we can anticipate if I measure the leg of this down move, this is 1440 points almost. It may come down to the level of 23,705. The market can go up to 23,705 in the coming days. Before coming to this level, it may go sideways and it may take time. So that's why in my previous video, I had mentioned I have considered everything. I have considered the time cycle and everything. Probably it may take time. By the end of November, market may find its feet and it may start its range breakout and it may start its upward journey. Now, at present, let us see what can happen tomorrow. Tomorrow, the market is flooded with news. The first news is GDP data, amazing GDP data, 7.8%. And at the same time, so many news are flooded that government is making a deal with Japan, and also we are and some news whether it is fake or not, because Trump tariff tariff I mean tariff implementation is questioned in the court. We are flooded with so many news in the market. So what happens to the retailers is, retailers are the people who react for the news. They react for the news and they go get into trap actually. Actually, these are the retailers. They look at the news and they trade in options. Most of the retailers are trading in the options. Option is the only thing what the market is doing. That too, the small retailers go for the option buying. Option writers also get trapped sometimes. That too, these are the small retailers. The big players, they don't write money on intraday basis. Their positions will be very top, high, or at the bottom. So we will not be, as a retailer, we will not be knowing where to do the market. They do mistakes and they tend to lose money. So this is the play actually, game plan by the big money to trap the retailers, because the big money has got its own problems of liquidity. For us as a retailers, we don't have that problem, because if we want to sell, we can sell immediately. Our positions will be very micro when compared to the big players' money. So big player transaction, it will run in millions, in crores. For that, if they want to sell or buy, somebody must be there in the opposite position to sell them. For that, they need to create all this drama, liquidity pools, liquidity grab, everything, stop loss hunting, everything will be there. Then only market will move. This is the market structure which happens on and on in the market. If we are aware of that, aware of everything, then we will not be trapped. The market has come down almost near the 24,347. But the market may stop over here. News is flooding through the market. The market may gap up. We will be in the wrong foot if we actually retailers will get trapped. Sometimes the market will cross this level. This is the high of this 24,572 is the high of yesterday's, Friday's high. Sometimes for the news, market will cross this boundary and it will present as if it is a reversal in the market. No, it is not a reversal. It is in this correction. See, you can see after the breakdown of this structure from 24,862, continuously market has come down. If the seller wants to sell the money, they have to sell at the higher price. So it is a sell and rise, but they are stopping. If they stop within this range, it is a trap. They will not go to this level. They will not grab this liquidity at once. They will create an illusion that market is going to go up, and it has the news of GDP data and everything is a illusion. It has been created in the market. You need to be careful. This is a big down move, 3 weeks of down move. So if you see, this is the peak actually. So anything, any move, suppose if I take the 50 percentage of this down move, it will come up to 24,670. This is the 50 percentage of this down move. Even the monthly, the market can, for the GDP news, it can bounce up. Even it can cross the yesterday's high, and it may peep into this above this high, and it may get you may get trapped. So you need to be careful. Tomorrow, the price action, but as an intraday trader, you can take the opportunity. Suppose if the market, this is the close, suppose it opens, if it is a close, and if it opens gap up, suppose above the opening price of the previous day, that is 24,466. If it opens above this will be a trap. Seller will be trapped, and the here writers are sitting over here. Call writers are sitting over here. Market may rally and trap all these writers. Writers' money will be actually their stop losses running maybe around this area, above this area, 24,677 to 24,600, anywhere in between this area. If the market moves there, it can grab the liquidity to move further downwards. So tomorrow, what can happen in the market? Let me go to the intraday time frame. Let me see what has happened. See, yesterday, initially, what happened is market gap down and it started moving higher. And then it came down, it made a double bottom, and then it started moving higher. But usually the people might have thought it is a reversal, and they might have taken buying of the call option. But they forget what has happened in the previous day. Previous day, the trend was down. So this was the boundary. This from here, this is the 215 level from where the market has come down. And if you ignore this candle, this is a down move. This is the down move, and then it is a pullback to sell on rise. Sell on rise. So tomorrow market can go below this. See, exactly it has stopped over here. I mentioned this level here because yesterday I had mentioned in my video, morning video, daily analysis video, I am watching 24,409 to 24,404. So exactly it had come down and a reversal candle has been plotted and it has closed around 24,426. For the news, market may gap up and you must remember this is the range 24,596 to 24,404 is the range of the previous day. That is 120 points. I think it is 120 points, or let me measure that. This is, this is 198 points range. 188 points range. If the market gaps, this is within the boundary of previous day. It can gap up open like this. If it gaps up and retest, and if it is within the boundary of this range, and what will happen, the first scenario will be any call option, the premium will increase. Because yesterday, the call premiums were plummeted to the bottom. So if I go to the 24,600 call option, let me go on, check what has happened to the 24,500 call option. Let us check 24,500 call option because the range is that much. So it was the high, 159 to 168 was the high made on Friday. It has been plummeted to 72 rupees. Okay, 72 rupees. So the range is, this is the range. Suppose if the market gaps up, then it may go up to 119 rupees. Initially, if the market gaps up, say for example, if it is 72 rupees and if it is gapping up to 119 rupees, that is 28 plus 38, 46, that will correspond to almost 72 points jump in the Nifty. If the market gaps up 22 points, this premium will increase to 160. So immediately when the premium gets, it will be in the peak. You should never buy immediately into this gap up opportunity. You should wait for the premium to become normalized and it has to show I'm holding this level, that is 72 points. Suppose if it gaps up like this, and then if it during the course of the time it comes and normalizes, and if it starts moving above that, then you can position yourself into the call option for a temporary basis. You can go long in the market till you may get 160 or it may reclaim the yesterday's high too, or it may go up to 155 points. It may go up to. You should not enter. You should never enter into the premium price. This will be the immediate reaction in the market. Let the dust settle. And the direction, when it gaps up and to this level, the direction will be towards the up. In case, suppose the Nifty falls down, comes down, because it has stopped at 404 and 371 to 347 is the boundary. immediate boundary for the Nifty, 404 and 371. In between, market can come down. For example, it has closed around 426. If it comes down 426 points, or it goes 391 or 380, 20 plus 26, 46 points down move will make the premium to lose 20 points in this. 72, the price of 72 Nifty call option will come down to 52 points, around 52 points. So that, and from there, if it starts moving higher, if it goes down and if it starts moving higher, that is a buying opportunity for the call option in the Nifty tomorrow. Or otherwise, if it gaps up and call option premium will become higher and the put option premium, say for example, if we take the 24,400 put option, that is the boundary, the premium running is 24,400 put option is 60 rupees. When the market gaps up, the premium may come down. And if the direction is towards the downside, after the initial gap up, and if the market fails to go past 24,500, suppose this is the level, intraday level of 215 level is 24,493. Then if there is a rejection, and you may get opportunity in the put option, the market may. So we need to see how the play will be there. In the opening bell, you will come to know what sort of price action we are in the market. We need to see. So that's why you need to keep 24,500 call option and 24,400 put option in your watch list. If the put option, initially if the Nifty gaps up, the put option premium will lose its premium. And at one point of time, both will balance out and the direction will be cleared. So you need to wait for some time, because underlying trading is different and the option trading is different. Almost option premiums have lost their premiums because Tuesday is the expiry day. From September, Tuesday has become the weekly expiry for the Nifty. So you need to be very careful. Sometimes if you play properly, if you take the position properly, you will be in the right side of the market and you can make money even in the intraday too. So tomorrow, these are the things you need to watch, and the levels to watch, VIX levels. VIX is 11.75, and based on the India VIX, the levels calculated are 24,577 on the upper side and 24,276 on the lower side. Weekly high to be 24,825, and there is no chance of market moving to weekly level because it has come down so much. I don't think 400 points gap up we cannot be seen in the market. So here the next level, weekly level, is 24,028. The market can resume its downward journey, and that's what it is showing. We need to wait and see. Time will tell what the market will do. We cannot predict anything, but we have to follow the price action. We have to trade it accordingly as it unfolds. So do not have any bias in the market. Do not get disturbed by the news. market will show you the direction, market will show you everything. Price action will tell you the story. Do not hurry yourself. Always patience is the mantra for intraday trading. If you are patient enough, you will get a proper trade. Coming to the Bank Nifty is also showing a bearish candle. And if I zoom in, I'm on the daily chart, same type of candle was formed. This type of candle was formed again, same type of, it is like a gravestone dozy. The gravestone dozy, it indicates that market tried to move higher. It is an exact classical example of the gravestone dozy. The sellers have plummeted here down to this. This is a bearish signal, and the location is not at the top. It is at the bottom. Sometimes these candlestick patterns are deceptive and we need to watch the price action. If I scroll back, immediate support from where the market has rallied, gapped up and moved higher, it is very nearby. 53,482 and the market has made 54,086. So tomorrow you need to watch this level 53,325 to 54,001. These are the immediate levels for the Bank Nifty to watch. Let me go to the 15 minutes time frame. So you can see the sentiment is bearish and price action is also bearish because it has closed below the opening price. Sometimes what happens, it can reverse and it can cross the previous day. That means Friday's high also. But even whatever it does, the bearish action has continued started from 54,990. So this will be a reaction to just to sell and rise in the market. But as an intraday trader, sometimes you can get a buying the call option also. Because sometimes 200 to 300, 400 points move, we can see in Bank Nifty or 200 points in the Nifty. So friends, so tomorrow, do not act on the news, wait for the price action and mark all the boundaries. Mark the previous to previous day boundary. It is very essential because the news is there. Since the news is there, you should know the previous to previous day boundary. That is, Thursday boundary is around 24,682. So your range will be, the trade will be between 24,347 to 24,687. So you need to be watchful. So you may get a good trade either in the call option because of the news, or if the market doesn't sustain, it can come down. It can stall within the today's previous day, Friday's range. It may not cross this. So tomorrow's price action is very, very essential. Even a slight gap up and retest can get an opportunity in the call option. So wait patiently. The market will tell you where to place your trade. Thank you very much, friends. Nalnakshi Swami signing off.